want to bring in Evercore ISI, their Senior Managing Director, Julian. They were trying to get you to look over here, Emanuel. Okay,
there we go.
Say hi to the folks. I thought it was interesting. One commentator called you the last bear on Wall Street. Of course, you went from 6,250 down to 5,600. And now you're talking 7,700. It's got 7,750. It's got folks out there saying, "What's going on?"
So if you think about what kind of year this has been, you can really put it in perspective. And we talked about this several occasions. But we were buyers when it counted at the April low. We saw the panic. I think what we underappreciated coming off of that low was just how successfly, in a way, the markets and the economy were going to be able to navigate all that policy change that was thrown upon it. And frankly, the animal spirits of the investing public, as you know well, have been very fully engaged for a number of months.
And listen, and to your credit, you're nimble, right? I mean, there's a lot of folks who are entrenched. They become entrenched, and those strategists have big egos, and they become wedded to their positions. You are nimble enough to say, okay, maybe things have changed. So what's interesting, your piece this week, the tagline was "Twice in a Lifetime." Later on, you gave an apology to David Byrne and Talking Heads because, of course, you say it's not just once in a lifetime, twice in a lifetime. What are you referring to?
So, first of all, between David Byrne and Talking Heads and Jaws, my favorite movie, and I didn't get in the water and the beach for a year after that. Look, the fact is that for us, and with enough gray hair, having lived through Y2K, invested and traded in the late 1990s, we see a very similar setup. And interestingly enough, where it really crystallized in our mind was at that bottom in April.
Right.
Because in 1998, you had a similar sell-off within the midst of the internet bull market. Same way you had the sell-off in the midst of the AI bull market. And then you had a massive rapid recovery. Same thing here.
You know, it's interesting, too. In that time in December 96, you had the irrational exuberance speech, and that haunted the rally the whole time, but it lasted over 4 years or something like that.
Exactly.
I want to bring up a point when you talk about this, because so much is made about 1999 and where we are right now. The average, the median rather, PE ratio next for the forward 12 months right now, 31. Back then it was 41. And somewhere, Time Warner was trading at 217. Cisco at 101. We have nothing really like that except perhaps for Tesla. And the reason I bring this up because you say you want to be in AI. AI everything, right? The enablers, the adapters, the adopters, whatever. AI is still the story.
Right. And look at today. It's a difficult day in the market. But that report last night from Broadcom, that stock, continues to do well. But what's really important about that graphic you just showed is the fact that not only are the stocks at lower valuations than they were in '99, but if you look at the last 5 years, they're actually, a lot of them, in lower valuations than the midpoint of where they've been the last 5 years. And one more thing, Charles, is that when you look at the broad stock market, in the last 2 years before the bubble popped in 2000, you had negative breath day in and day out for 2 years. Advancers beat decliners virtually every day in this market, and with the new highs in the index, you've made new highs in the breadth
So
of the
you
market.
upset a lot of people, right, with this 7750 number. But your report says the animal spirits, and you just kind of alluded to it, the last 2 years of that massive bubble, that if we become a bubble, then we could go as high as 9,000. Consumer confidence, business confidence, investor confidence, all could just roll into one thing and lift us as high as 9,000?
Well, so what we've seen, again, is the investing animal spirits have started percolating. But frankly, when it comes to the economy, and all this data that we've seen today tells you that there is still uncertainty in the economy. But in our mind, as unemployment stays, call it below 4.5, closer to that 4.3. We think the trough of the economy is coming, and we're going to get a reacceleration in growth, which means there's going to be more confidence.
I only got less than 30 seconds. Thoughts on the Fed, the number we saw this morning? How much of a role will the Fed play in this? Will they be actively cutting, you think?
The Fed's going to cut in September, and we think, you're going to get at least one more cut in either October or December. And frankly, from the market's point of view, you'd rather not get a cut in October because you said it yourself. That's a signal that things have gone too far. We don't think that's the case. We think that weekly jobless claims number, strong, steady. This is just a weak spot that the markets and the economy is going to plow through.
It's always great having you on.
Thanks, Charles.
All right, thank you so much.